Okay. Um, Basically, in summary of what's been going on the last week to 10 days, it's massive risk off right across the markets. If I may, let me just bring up a couple of um, significant instruments that relate to um, that relate to the broad and character of the market that we've seen over the last. The lead indicator, as we know, and we discussed before, is a commodity and it's copper. This will is that better, Andy? If we look at the declines in the last declines over the last week, have been led by the copper. The copper is, look at this. Incidentally, this tells us all we need to know. There was a big failure to make a new high in this copper. The copper went through the structure and just had a precipitous decline. The copper is a lead indicator, okay, to the broader markets. This copper led the decline in the S&P by about 2 days. As soon as when the copper went through the structure, a couple of days later we had declines across all the indices and the rest of the commodity sector. And that, of course, as far as we're concerned in this session, and considering how to position ourselves going forward this week, if we get a continuation in the risk off, i.e. the concern about global growth and the condition of the macro markets, the decline in this copper and the parallels in the commodity currencies, i.e. the Aussie and the CAD, is going to be exacerbated once more if we get a continuation of these sort of the moves, in particular the moves in the copper, the S&P, and the assets that are associated with the safe haven money. Where are people putting their money? Well, as we know, over the last couple of weeks, in terms of currencies, we've had a huge and successful so far intervention in the Swiss franc to peg the euro Swiss to around 120. That's worked so far. The Swiss is traditionally a safe haven currency, so with a headwind of intervention, that is, the purchasing of that as a safe haven asset is restrictive. The yen, similar story. The Bank of Japan also have a propensity to intervene, and that leads us, as we've been talking about, right from the 74 area, it leads into the US dollar. The US dollar, the Swiss and the yen historically are the safe haven assets in terms of currencies, as far as currencies are concerned. We talked about here, down here around 74 in the dollar index, there was a hell of a lot of bad news for the US dollar. The threat of QE3, the downgrading for the first time ever by the S&P of the US economy. Yet the dollar index, is the dollar versus a basket of 6 different currencies. It is worth noting, as we mentioned before, that the dollar index is made up 58% of the euro dollar. Okay, so if you're looking at the dollar index, euro dollar is also going to be going in parallel. So this increase in the US dollar is perfectly explainable. Now, the biggest movers last week were commodity currencies versus the US dollar. Does that make sense? Of course it does, because a stronger US dollar, okay, the US dollar and commodities have an inverse correlation. So a stronger US dollar being bought as a safe haven asset, because there's declines in the economy. When there's declines in the economy, it's bearish for commodities because there's less demand, and also put into the pot a stronger US dollar. Okay, a strong dollar is negative for commodities, so it's not going to surprise you that the first two currency pairs you're going to look at, because they've been very significant movers, the Aussie dollar versus the US dollar, because the Aussie dollar is what the market calls the Aussie, the confidence currency, and of course the dollar CAD. The CAD is also a commodity currency and very much linked to the health and wealth of the US economy in particular. So the rally in the dollar index, the decline in the copper, as I've just shown you, and the S&P. This is a chart of the S&P. You can see we're right back down. We hit the lows of this extremely volatile consolidatory period in the wake of the initial capitulation at the end of July, beginning of August. So we've got back on the table, we have very much a risk-off environment, and what we're going to do is look for points where we can position ourselves to benefit from a follow-on in this risk-off environment, or indeed levels that we're going to be looking to take in case of a recovery. Okay, so the first, what we've seen then is we've seen the US dollar strengthen. Okay, the US dollar is the strongest currency out there. The yen is basically flat. The weak currencies are the Aussie, the CAD, and the euro. The pound is weak, not quite as weak as the Aussie and the CAD. So in terms of weakness and strength, there's the Aussie, there's the CAD, and there's the euro. Okay, the ugly sisters, if you like. And the yen is basically neutral, and the dollar, as we've seen, is leading the way for the reasons I just explained. So from there then, let's go and get down to it. Right. I'm just going to sort out the recording, and we'll